Hello, fellow traders. 'Tis I, the Rumpled One. Monday, April the 8th, the year 2019. Let's talk trading. Horizontal lines, rat zone. Before we dive into this, I just want you to remember, no matter what the system I am discussing, you have to use your money and risk management. You cannot afford to lose more than what you're willing to lose per trade, no matter what system, indicator, EA, or what. You have to do this. Failure to do this can be fatal to your trading account. So I'm going to do something real quick here. We're going to look at the weekly. As you can see, all the gaps filled. Last night there was only one of these pairs up here. I don't remember which one had a gap that hadn't filled. Now they're all filled. So once again, the gap fill on that Sunday/Monday open proved to be profitable. Now, looking here, you can see we've popped through the previous week's high. We're 5 pips above it at the moment. Now 4. And so once again, exiting that upper weekly wick zone here, once to the bottom and now to the top. Now, normally, we look at the euro yen, but I'm going to switch to the pound dollar because this is what caused me or inspired me. This is where I got a clue about the rat zone. So we're going to switch here and we're going to look at a blank daily chart. It's a daily. See, there's no indicators. It's just blank. Okay. Now, I used to, look at the euro dollar, look at the pound dollar, look at the dollar yen, look at the dollar franc pretty much every day. The majors and some euro yen, and some dollar Canadian at times too, but mainly the majors. And so if you just look at this chart, I mean, I don't know how long it would take you to see it, but I noticed something. The wicks are very long. And I thought, maybe, just maybe, I could exploit that. So in other words, you see price came down and then it popped up. Price went up, then it came down. And so I was wondering, is there possibility to make money off of that? And lo and behold, there is. Now, let's see. Let's get to the frequency distribution chart. Okay. Now let me show you here. This is the new 2019 frequency distribution display. And what's new about it is I'm going to be sending it out. So I know you're expecting it, but it will come out. What is different is I added this show cumulative. So we can either show this as a cumulative or as a normal frequency distribution. Because the old way in the beginning, before 2017, I think it was, I showed it the normal way. And then in 2017, I switched over to cumulative. But then somebody asked me a question, and I realized it'd be real easy to combine the two, just put a switch and then give the user more flexibility. So that's what you 2019 donators can look forward to. Okay, back to the main point here. Okay, so we look at, in this case, we would look at the bottom of the candle minus the low. And on the green candles, in a way, we want to see the high minus the top. But we actually don't even have to filter. We can just look at the whole thing. So you can see here, difference greater than 0, 98% of the time. Because there was this one candle, where was it? That the open and the low, or so the candle bottom and the low were the exact same. I don't see it on this chart. Maybe it was further back, but it's kind of hard to see with small candles. So we'll stick with the bigger size candles. And you can see here, 69% of the time, bottom minus the low is greater than 10. And here, in this case, only 47% is greater than 20. On the other hand, high minus the top, the difference greater than 10, 89, different greater than 20, 69. And back in the day, geez, over a decade ago, I think, when I came up with this, this number was greater than 60. So you can see here, this is why you have to run these frequency distributions. But this is only over the last 100 bars. Let's crank that up to 1,000 and see if we get something radically different here. My bars. Okay, now we have 56 and 63. So better than Vegas odds here. And so this shows that if you trade within 20 pips of the daily low and the daily high, chances are price is going to pull back. And so that's how the rat zone was born. Okay. Normally, if I was in front of people, I'd say, is there any questions? But if you have any questions, you can post them in the comment section or out on one of the forums or over on Facebook. Now, if we come back here, I used TRO-HL5 right here to show the rat zone. And so it's like show high-low offset true, and we're going to make it 20 pips. Okay. So you can see here, here's the green rat zone below, and the red rat zone is above. And there's no shading on this indicator. And so you can see here, maybe if I pull this over, we can make it just a tad bit bigger. Yeah. Nope. That kind of interferes a little bit more. There we go. Let's switch the time frame to 1 hour. So we put in a low, and then we put in the high. And remember, I like to have about at least 50, if 60 is even better, pips, so we can get some distance between the two zones. Put in a low, put in a high. Now you can see here it exited the rat zone, came into the red rat zone, came into the green rat zone and exited. But we can go over here to the normal chart that you guys are probably used to seeing on the video. And this is using the TRO rat zone indicator that's in the mother lode, and it hasn't been changed in years because there's nothing to change, except I was thinking I could, with the training wheels on, if this if the range isn't above a certain range, then it would just, say nope, range not met, range threshold not met, no rat trading, or something to that effect. But you can see here, price came out of the zone more than once. So if you enter a trade within 20 pips of that high, you usually can expect it to move out. Or if you enter 20 pips within the low, you can expect price to move out based on statistics. Of course, does it always work? No. Sometimes if you get in, then price could keep going against you. That's why you have to have something that works. And what we use is what's called the rat reversal. At least that's one of the methods. And let's see if we have a good example here. Here we go. This is a good one. So we've got a green bar closed, red bar closed, and then the next bar broke the low. That's where you go short. And in this case, it came around, but it didn't make a new high. So once again, money and risk management is important. Then you can see here, we had another rat reversal. Green bar closes, or a red rat reversal here. Green bar closes, red bar closes. Price breaks the low. See here, it kind of went against you for a little bit. And now it proved to be a winning trade. And that's how that works. And at the bottom, red bar closes, green bar closes, price breaks the high, then you can go on. Now, it doesn't have to be the next bar breaking the high of the green rat reversal or the next bar here breaking the low on a red rat reversal. Doesn't have to be the very next bar. So you can see here, you could have still taken this rat reversal right here again because it broke that low. That's what you're looking for. And that's pretty much it. When do you take profit? Well, once again, you can look at the price action. You can have a set target. You know, if price goes from the red to the green and starts reversing, take your profit. If it goes from green to red and starts reversing, once again, take your profit. But the main thing is once again, just looking at the chart here, you can see there's some pretty long wicks. You can verify it, where'd I put it, with the frequency distribution here. And so right now you can see close is 26 pips off the low and 26 pips off the high. So really, no matter which way, if you had traded, you could have been 6, or right now 5, 7, and 5. You could have been 6 pips to the good either way. Now, some people say, oh, that's only 6 pips. You know, I want to make 60. I want to make 600. Well, then this isn't the system for you. It just isn't. But as you can see, you know, you have the opportunity here, you know, 44% of the time, it's going to get to 30 based on statistics. You can see here 36% of the time coming off the bottom, it's going to get to 30 or more. So it's basically a system that tells you when to enter and where to enter. You know, somewhere near the top, somewhere near the bottom, a reversal trade. Now, one thing to know, if you've been following me, you know about the green rats versus the red rats versus the Yale students. And there was a study done way back in the day. I'll have to pull the quote out for you, maybe bring it up in the video tomorrow. But basically, they put the rats in a T-shaped maze, and there was a weighted coin. And basically, the cheese was on the left-hand side of the maze 60% of the time, and on the right-hand side of the maze 40% of the time. So the rats figured out, go to the end of the, you know, line there and always turn left. You get cheese 60% of the time. Well, the Yale students tried to figure out this by using their algorithms and everything, and they came up with getting cheese about 52% of the time. So basically, rats were smarter than Yale students. So the takeaway is, if you only trade in one direction, then the chances, I believe, you put fate and the chance of getting the cheese on your side, simply because you can be switching at the wrong time every time. You could go long when you should be short. You could go short when you should be long. But if you're always long, you won't always be wrong. You know, if you're always short, you won't always be wrong. So that's why I say you're either a green rat, a red rat, or a Yale student. So, you know, and I tease people when I call them a Yale student. They know I'm getting on them. So anyway, that's the brief overview of the rat zone and the rat reversal. And I hope you learn something. If not, ask questions, because just remember, it's not what you trade, it's how you trade it. So get out there and drain the banks like a rat.